Wouldn't it be great if you could go ahead and know exactly when a trend in the bot is about to start or end? Then you could go ahead and place your order, ride the wave, and then take a profit. Well, there are many indicators in the stock market that you can use just to that end. And today in this video, I'm going to introduce you exactly to one of those indicators. Hello guys, welcome back to Best Income Answers. If you're new here, my name is Ralph, and in this channel we talk about personal finance, the stock market, and business strategies. I'm definitely sure that you can find a lot of value here, so please go ahead and hit the subscribe button and the bell button so you can know exactly when I post a new video. The Doji is an indicator that you can use out there when you're trading. In simplest form, it looks like a cross. Now it won't always be symmetric. Sometimes you can have it like this, or sometimes you can have it like that. But the idea behind it is that the price opened here and closed at the same level that it opened. And if you want to interpret it in another level, so basically what it means is that the price opened here, went up, went down, and then closed at the same level. Or it opened, went down, went up, but closed at the same level. Regardless of what happens, the idea behind it is that the price closed at the same level that it opened. Well, if you look at the stock market like that, on one side you have the buyers, and on another side you have the sellers. While the buyers, they will always try and push the price up, whereas the sellers will try and push the price down. And the dynamic between the two is what controls the stock price, right? Then what this candles tells you is that at this particular time, the buying pressure and the selling pressure were equals. So the buyers try to push the price up, the sellers push it down, but at the end, it closed the same. Or the buyers tries to push, the sellers try to push it down, the buyers push it up, but it closed the same. Because the idea is that the price itself closed at the level that it opened. So there is uncertainty on the market. Nobody knows for sure where the price is going to go, and this is how you can interpret. This is how you can see the doji. Now, what does that actually tell you? If we are, let's take the example of a stock that's been uptrending. We've got some good news, good earnings, and this is a new hot thing out there. So if you have a price that's going up like this, now coming at a certain point, that price will never go up eternally. It will have to go down at a certain level. So here you have a doji, uncertainty, buyers and sellers, pressure is equal. So now what is going to happen? Now you have to understand the the mindset behind it, all right? So if somebody had bought at this level and held it for 3 days, now that person might be looking to sell at that point, depending to the profit. So whoever was the buyer here has become the seller at this point because the price action has changed. So so nobody's gonna be a buyer in the stock market forever because everybody's in there to make a profit. So if the price reaches the point where they're looking to take a profit, and this is what that signals mean. So everybody that's been holding for months past, or for investors or whatever reason, whoever just bought during those 4 days, this means that on the fifth day there was a lot of selling pressure. But at the same time that there was a selling pressure, there was also a lot of buying pressure. And we have to remember that this example is for a daily chart. So whoever bought here is gonna be looking to sell off at this point. So the doji here, the hypothesis that you can make here is that the doji reflects that there is uncertainty on the stock market, and most likely that price will reverse. If you're going with this here, the price goes down, it goes down, and goes down. So the doji is the indicator of a trend reversal. So it tells you when the trend has ended. Now, will it be like that 100% and every day? No. But using that, you can hypothesize that the trend has just reversed. Now, on the other way around, it could be true also. Now, let's imagine that you had a stock that was going down, and for some reason, you get a doji somewhere at the end of that trend. So what would that mean is that the stock most likely will change and go on the positive. And the psychology behind it would be that if you're looking at the stock that has a really strong downtrend, so there will be a recovery period for that stock. So it goes down, the doji here might signal the trend reversal. Now the question that you might be asking yourself at this point is, where can I place that order? How can I know exactly when to place the order in the stock market and take my profit? So let's go ahead and do that. So if you're looking at this, let's take the first example with a stock that was in an uptrend. So the stock was uptrending, and then you go ahead and you have a doji. Now you have basically the strategy that I like to use is that you have two at this point. You can either be aggressive or you can be passive. If you're being aggressive with this one, that means that you would enter the market on the first candle afterwards. You had the doji on a string uptrend after a string uptrend, and then the first candle that you see, you get in. So technically, you would get in here, whatever the cost. This is a strategy. You are confident that the stock price will go down. Now that is if you're shorting. So you say, okay, I'm gonna short that stock, and then you get in here, and depending on your risk benefit analysis, you would get in that candle, and this would be your stop loss. The top of the doji, the highest price that the doji went on the previous day, this will be your stop loss. And then all you have to do is depending on your risk or reward ratio and your plan, your trading plan, you would go ahead and wait until the price reaches that point for you to buy back and cover your position. Now, this is for the aggressive method. Now, with the passive method, what you would do is you can look at the open price or the lowest point at which a stock reached before the doji, right? And then place your and then you would place your sell order under it below that point. So your hypothesis is, if this is a strong downtrend, if that stock and has reached a point where the trend has reversed, so if the price reaches below that level, I will buy in. And then here we would have a stop loss. In the event that it doesn't work, and then let's say that you do get filled here, but then the trend reverses. If the price reaches that point where the doji is, depending on your risk reward ratio, again, you would place a stop loss here, and then this is the amount of money that you would lose. And how does that look if you're bullish on the stock? You would go here, and this is the doji. If you're aggressive, first green candle on the next day, you get in, and this would be your stop loss. But if you're being passive, you would go here, and then you would get in there on the candle after the first day. So it is green, so this is the confirmation. So that will be the confirmation. divided to where your risk reward ratio was for your sell price, and then you would take your profit. So what's important to remember is that the doji by itself is not the only thing that can happen, because there, again, there is no guarantee in the stock market. There is no guarantee in the stock market. So you can never know exactly what is going to happen. But the doji, you can use it along with other indicators to go ahead and place your trade and then make a profit, depending on your risks, your risk tolerance, your hypothesis, your strategy, market sentiment, market environment, all of that stuff. You go ahead and then you place your order, and then you get filled, and then you place your stop loss depending on what your risk reward ratio is, and then you trade. So that's all I had for the doji. If you found value in this video, please go ahead and hit the like button. This is gonna help this channel tremendously, and it's gonna help me even more. Leave me a comment in the section below, and I will see you in the next video. Thank you for your time.